Hi, I'm Paul Marriage, Tolworth Investments. Welcome to the November 2020 monthly for the HI European Market Neutral Fund. 2020's volatility continues. It's been a really difficult year to manage money, and we've done a pretty good job up until Monday, the 9th of November, when the market really changed. That was very much a one-day reversal, where everything that had worked in 2020, pretty much up until that lunchtime announcement of the Pfizer vaccine effectiveness, turned global markets around. I could talk about this for the whole video, and I'm not going to, because I'm sure you've read lots of interesting stuff, and I'm not going to add much to that conversation. I think the key thing is that this fund's had a good year this year, up until then, and it was on the defensive growth, effectively being long that, and short probably a bit more value. That combination was turned on its head, and clearly the market really sought value, and to fund that value sold its defensive winners, some of the tech winners, some of the things that had been good COVID plays this year. That was a painful process for us, where very broadly our long book didn't want to go up with the market. In fact, in some places it went down. It was a very poor relative performer, and a few of our shorts really moved up quickly. Been running money a long time, and there are periods where it simply doesn't go right for you. And you can have serious NAV impacts over short periods of time, like we had on that Monday and Tuesday of that week. My experience is not to change things very quickly, not to run a mile, not to try and chase the ambulance and walk away from the market. It's to look and see what works, focus on the things you think you're good at, and make adjustments. And that's exactly what we did. We definitely proceeded to give the long book a little bit more value opportunity within a broad portfolio, which has still got lots of great stocks in. So we stuck with Schneider and Puma, for example. Teleperformance, Logitech, names like that came off. They were described as kind of seemed to be techie losers in this change of market conditions. And we added a little bit of values, things like Airbus, for example. So working around the edges of the portfolio to give us a slightly different shape. We haven't suddenly gone down the value route. We haven't closed all our value shorts. We haven't sold all our long-term growth stocks. That would be against where we're trying to get to make money for this strategy long-term. We've just given it a little bit of a reshape. And after those tough 2 days, we've recovered a bit from here. So what can we look at in the future to perhaps, what have we learned, I guess, from the experience of those 2 days? I think one important thing is that our factor models and risk models were showing us to be just a little bit long momentum, 0.5%. So not a big number at all, but actually in reality, some of those models, they don't really work in big changes in market conditions. We've always probably known that was the case. Our models worked well for us back in March, but this change of conditions didn't work as well for us. So one shouldn't rely on models entirely. They should be a guide. They're a bit of a comfort blanket. They can help us. But we've responded to that with a few more pairs. So, for example, long Total, short Repsol. So I think we'll see a few more pairs in the portfolio in general, and that's been helpful for us. But equally, we're not going to throw the baby out with the bathwater here. We're not going to completely change the portfolio because we've got lots of good things in, as the steady recovery in the performance since those tough 2 days has shown us. So as we look into the year end, what are the challenges we face in December and beyond? So very short term, there's a lot of noise in the UK, and obviously it's a pan-European fund around Brexit. And I think some of the upside of a Brexit deal, which now looks quite likely, was probably taken away in the pandemic rally. UK markets in particular were strong, and we had some winners there as well. So the Brexit story may not be quite such big news as perhaps it would have been without the vaccine. Clearly, countries are going through different phases of lockdown, coming out of those, seeing how effective it's going to be through the Christmas period. I think we've just got to stick with a balanced portfolio. We've got to keep thinking of new ideas and keep working on an approach which we think is going to deliver good, modest returns most months, and occasionally accept we're going to get a few of these. So you've got to work hard to deliver a good positive year for the fund overall on the 12-month basis. We're coming through one whole year of running this strategy for Hedge Invest, which we've really enjoyed, and I think we've done an okay job. And we've got to look forward to next year, get on the front foot, see where we can see some winners, and we think there may still be some great opportunities in the UK market in particular next year in Q1 and Q2, but also see and look for signs as to whether the market wants to take a longer view on the growth value thing, and maybe we'll have to be more selective in our long-term winners, and build in a broader portfolio underneath that. I think sometimes it's an opportunity for the second and third teams in your book. Your first team is what you always want in the portfolio, at the top of the portfolio. Your second and third teams are stuff that's coming up, and maybe we need more stuff to come from our second and third teams right now. So all in all, that was a difficult month for us. We've put it behind us. We've made a few changes. We're back on the front foot, and we're going to work hard to deliver a good, positive year for the strategy from here. Thank you very much for your time, and I hope that you all have a fantastic festive season wherever you are and under whatever conditions you have to enjoy it through. Thank you. Goodbye.